generational jump in investment around data centers. And by the way, this is not just the physical buildings, the data centers themselves. We have to add in the hardware, which are the racks and the mainframes, and then the software, which are the LLMs, the large language models that the hyperscalers are driving, plus the energy. So there's a couple of dimensions here. We're starting to hear more stories in the press about the possibility of a bubble. So I think the focus is on the very elevated price to earnings ratio. So all of these massive investment by these hyperscalers at some point are going to have to generate earnings to justify those asset prices. And then from a macro side, they're also hopefully going to generate some productivity gains and higher growth. So those are the kind of risks we're looking at. We are currently in a forecasting round and we'll be publishing in a couple of weeks, and will contain some of that material. But I think a downside scenario in the next year or two is that the hyperscalers, in fact, do not deliver some of the earnings that are priced in right now. So we would have an equity market correction, and then to the extent debt is involved, maybe some stress in the credit markets. That's certainly not our downside right now, but it's a risk we're going to be watching because, again, we've had a very large amount of investment in a very short amount of time with high expectations around earnings, and we'll have to see how all of that plays out.